Hey everyone, welcome. You ever stop and wonder, where do I actually stand in the world of investing? Well, today we're going to break it all down. We're talking about the 7 levels of investors, from the total beginner all the way to the seasoned pro. Let's figure out where you are on this roadmap to your financial future. So, seriously, take a second. Think about it. Are you just getting your feet wet, maybe feeling a little overwhelmed? Or are you already in there, confidently managing your own stuff? The cool thing is, by the end of this, you're going to know exactly where you are. And even better, you'll see the path to get to that next level. Okay, so this is it. This is our ladder for today. We are going to climb this thing starting at level 1, which is all about just getting on solid financial ground. And we're going to go all the way up to level 7, into the world of the real pros. But look, before you can start climbing any ladder, right, you need a solid foundation. It's got to be stable. And that's exactly what these first 2 levels are for. They're all about setting you up for success before you even really start thinking about growing your wealth. All right, let's start with level 1. Now, this might sound a little weird, but at this stage, you're not really investing to build wealth. Nope. If you've got high interest debt, think credit cards, you're basically on a financial treadmill that's going backwards. That debt is costing you way more than any investment could realistically earn. And this right here shows you exactly why. Let's just use some simple numbers. Say you get a pretty good 10% return from the stock market. Awesome, right? But if your credit card is sucking 15% out of your pocket every year, you're still in the hole. You're losing 5%. The math is just brutal, and it's not on your side. But here's the aha moment. This is where you've got to shift your perspective. Paying off that debt, it's not just an expense. It is, hands down, the best investment you can make. Think about it. It's like getting a guaranteed, tax-free, totally risk-free 15% return on your money. You're just not going to find that deal anywhere else. Period. Okay, so you've crushed that high-interest debt. Amazing. Seriously, congratulations. That brings us to level 2, the saver. Now, the danger here is different. It's actually playing it a little too safe. Your money is secure, for sure, but it's barely growing. It's just sitting there. Yeah, savers usually park their cash in places like these. Savings accounts, money markets, CDs. And it makes sense, right? You're prioritizing security over growth. But here's the hidden catch. These accounts almost never keep up with inflation. And what does that mean? It means your money is actually losing its purchasing power year after year. Okay, foundation's built, debt is gone. Now you're ready to really start investing. And this is where we hit a huge fork in the road. There are basically 2 main paths that most of us will take. First up, we've got level 3, the passive investor. This is the classic set it and forget it approach. You're not trying to be a hero, picking the next Apple, or trying to time the market perfectly. Nope. You're just making a simple, long-term bet that the overall market is going to grow. And how do they do this? Through a super powerful idea called diversification. It just means you don't put all your eggs in one basket. By buying something like a broad market index fund, you instantly own a tiny little slice of hundreds, maybe thousands of companies. So if one company totally tanks, it's just a tiny blip. It barely even registers in your portfolio.
The other secret weapon they have is compounding. I mean, this is the real magic of investing. It's where your earnings start making their own earnings. It's that classic snowball effect. The longer you let it roll downhill, the bigger and faster it gets. This, right here, is the absolute key to building serious, long-term wealth.
And here's the surprising part, the really crucial takeaway. It might seem way too simple to actually work, right? But decades of data, tons of it, show that this super simple, low-effort strategy often beats the people who are trying way harder with their complex, active strategies. It's an incredibly powerful and easy path for most of us. So let's put that right next to level 4, the DIY investor. This is a totally different ballgame. The DIYer is hands-on, they're doing the research, they're picking individual stocks they think are going to be winners. It takes way more effort, it's definitely riskier, and like we just talked about, all that extra work doesn't always pay off with better results. Okay, deep breath. We are now heading into the expert ranks. Let's be real, for most of us, landing at level 3 or 4 is an amazing goal, but it is so cool to peek behind the curtain and see what the world of the pros looks like. So at level 5, we meet the advanced investor. We're not talking about a hobbyist anymore. This person is going way beyond the basics. They are digging deep into a company's financial statements, trying to figure out what it's truly worth, just like a professional Wall Street analyst. I mean, they're actually reading the income statements, the balance sheets. They're using sophisticated valuation models and analyzing all these complex ratios to really judge a company's health. And you know what that gives them? Conviction. So when the market totally freaks out and everyone is selling, they don't see fear. They see a potential buying opportunity. One step higher, at level 6, you find the portfolio manager. The huge difference here is responsibility. This isn't just about their own money anymore. They are professionally managing millions or even billions of dollars for other people, for clients, for big funds. Their whole job is to take all those advanced skills we just talked about and do it at a massive scale. And that requires an incredible level of dedication. I love this story about the legendary manager Peter Lynch. He was famous for his obsessive research. The guy would literally schedule meetings with CEOs while he was on vacation with his family if he found out a company he was looking into was nearby. I mean, wow. Talk about commitment. And that brings us to the absolute top of the pyramid, level 7, the capital deployer. These folks are playing a completely different game. They've moved way beyond just buying shares of a stock. They are buying or funding entire companies. Yeah, we're talking about the world of private equity, venture capital. Think of Warren Buffett and Berkshire Hathaway. They don't go out and buy a few shares of Geico or Dairy Queen. No, they buy the whole company, lock, stock, and barrel. They're using massive amounts of money to control businesses and literally shape entire industries. Wow. Okay, so we've gone on quite a journey, right? All the way from just paying down a credit card to buying whole companies. So now, let's bring it back home. What does all of this mean for you? We've walked through this entire ladder of progress. You can see how each step builds on the one before it, creating this really clear path from, being on shaky ground to becoming a true expert. Now, everyone's journey is going to be a little different, but the steps themselves, they're crystal clear. So I'm going to leave you with this one final question. You have the map now. You can see the whole terrain laid out in front of you. So what is the one single step, the one thing you can do, maybe even today, to start climbing to your next level? Think about it.